Imagine checking your phone and seeing green arrows all over your stock app. Well, that's exactly what investors saw today. Wall Street had a great day, and Nasdaq, which tracks mostly tech-related stocks, rose more than 1%. The reason? It's just one word. You guessed it right. Apple. When a tech giant company like Apple does well, it lifts up the entire market. But it wasn't just Apple. Other factors also helped boost investors' confidence. But what really happened? Why is Wall Street celebrating, and should you care even if you're not an investor? Let's find out. Wall Street closed higher today, meaning that the major stock indices ended the trading day in a positive territory. The Nasdaq Composite, which mainly consists of tech-related companies, rose more than 1%. That's a pretty solid gain for one day, right? The S&P 500 also rose, and even the Dow Jones Industrial Average, which consists of mainly big major companies in the US outside of tech, closed slightly higher. This rally was powered mainly by Apple's strong performance. Apple shares just rose when company announced of this exciting news, and investors responded with a lot of enthusiasm. When such a large and influential company performs well, it can lift up the entire market, and that's exactly what happened. So while it was Apple that rang the bell, other tech companies also joined the celebration, and this positive energy spread across Wall Street, giving investors more hope and confidence. Apple was a star of the show. Its stock jumped over 4% in a single day. And when a company as big as Apple moves like that, the entire market feels it. Why? There are a couple of big reasons behind it. First, Apple just announced a massive new stock buyback program. That means a company decides to spend a huge amount of money, about $110 billion, to buy back its own shares. And when a company does that, it reduces the number of shares available in the market, making the remaining available shares more valuable, making investors really happy. Second, Apple's recent earnings report was better than many expected. Although the sales of some products like the iPhones was a bit lower, but still, Apple managed to make a strong profit. And most importantly, the company gave investors a big reason to feel more confident about the future, especially with their growing focus on services like iCloud, Apple Music, and AI tools, etc. So in short, Apple made money, announced a record-breaking buyback, and gave off positive vibes. This was merely enough to excite the Wall Street. When Apple moves up, other tech stocks usually follow. And that's what we saw today. After Apple's big announcement, investors rushed into other well-known tech names. Microsoft, Amazon, and Google parent Alphabet also saw their shares rise. This shows how closely connected tech companies are. They often perform well or poorly together, especially when investors are feeling confident about the overall market direction. Another reason tech stocks rallied is growing excitement around artificial intelligence or AI. Companies like Microsoft are heavily involved in AI development. And with Apple hinting at more AI features coming soon, the whole industry is buzzing again. So today wasn't just about Apple. It was a good day for tech as a whole. And since tech makes up a big part of Nasdaq, that's why it jumped more than 1%. Beyond Apple, there's another reason the stock market did well today: improved investor sentiment. Lately, investors have been worried about a few things, like interest rates, inflation, and whether the US economy might slow down. But this week, some signs pointed in a more positive direction. For example, recent economic data showed that inflation might be cooling off. That's important because it gives the US Federal Reserve less reason to raise interest rates again. Lower interest rates are good for businesses and can help the stock market grow. Also, job market reports showed steady growth, but not too much. This means the economy is still moving forward without overheating, a good sign for both workers and investors. And of course, when a major company like Apple gives strong results, it helps calm fears and brings back optimism. It sends a signal that some companies are still making good money even in uncertain times. So when you combine solid earnings, improved inflation data, and a powerful performance from a company like Apple, you get a recipe for a stock market rally. You might be thinking, that's great for Wall Street, but what about me? So here's the thing. Even if you don't own Apple stock or any stock at all, these movements can still affect you. Many retirement accounts, mutual funds, or ETFs include big companies like Apple. So when their stocks goes up, the value of your investment can go up too, even if you're not trading stocks every day. Also, when the market goes up, it builds a general confidence in the economy, which can lead to more hiring, business investments, and sometimes even better consumer deals. That said, markets can go up and down very quickly. One good day doesn't mean that everything's perfect, but it does show that the confidence is returning, and that's surely something to watch. After a strong day like today, the big question is, what's next? Tech stocks may continue to rise if more good news comes in. Apple's buyback program will likely keep the stock strong in the near term. And if tech stocks comes in with solid profits, we could even see more growth. However, everything is not guaranteed to go smoothly. Let's see what Jason Brown, the president of Alexis Investment Partners, pointed out in an interview.
I think there is a lot of tug of war at the moment between, are we going to see a seasonal setback after the strong run we've had year to date, or are we going to continue to grind our way higher? We're kind of in the camp of anticipating a seasonal setback ourselves, but we wouldn't bet against the market, and today is a great example for why.
His comment really highlights a key tension going on in the market right now. Many investors are unsure whether this rally has more legs or if we're heading for a pause. This is the reason many traders are cautious despite of today's optimism. While today's rally is exciting, it's also important to stay grounded. So this is all from my side for today. I hope you found this video helpful, and if you do, make sure to like and subscribe to my channel for more financial insights, and I'll see you tomorrow with another fun yet informative video. Until next time, take care.
So make sure to smash the like button for the YouTube algorithm, and let's get right into it.